what's going on? In this video, we're going to answer a very important question which I get asked by various traders all over the world almost every day. So, Leonardo, when is actually the best time to short the market? And at the end of the video, we're going to talk about some top option trades that we are taking today on the short side. Now, with that said, this is a cool video where you actually get to vote. Yes, guys, make sure you type your vote as we're going for certain conditions that we're going to identify. We're going to list them from 1 to 7. So as we go through the video, make sure you type in the comment your favorite condition. Check this out. This is what I mean. Now, the actual best time to short the market was yesterday on November 19th, 2019, as we identified by posting a video about the tops and divergences and all the great stuff. So check this out as we're going for this video, okay? We will identify certain conditions, okay, that will point out to some of the greatest opportunities to short either an individual stock or the market overall. So despite of whether you're an individual stock trader or you're trading futures contracts on the S&P, SPY, the Qs, or whatnot, you will definitely learn something beneficial in this video for yourself. So with that said, without any further ado, condition number 1, her name is Aubrey. Guys, type in the comments if you like the condition number 1 among all the conditions that are going to be described in this video. So the condition number 1 for shorting the market is that everyone absolutely knows and highly convinced the market will move higher. Let me show you a quick chart. And guys, even if you're a beginner, if you're an absolute beginner trader, you should know what this represents right here. So I'm going to give you a quick moment to answer that inside of your head. This chart right here starts at $1 and goes all the way to 20K pretty much in a consistent fashion, non-stop. What the hell is this? 1, 2, 3. You should have an answer to this. Guys, come on, man. This is the chart of Bitcoin, right? And exactly what happens next. The video we posted in December 2017 when everybody was screaming Bitcoin to 1 million. We said short the hell out of it because we said it meets our criteria for a specific chart pattern that we describe in our charts divergence course, which is known as loss of momentum. So while everybody was insanely bullish, we were getting insanely bearish, and we got that trade right. Now, the most important thing is to understand the psychology behind it. The higher something goes, the more convinced market participants become that the only ultimate resolution is another move higher, and they get highly complacent. So when you're seeing this, think that everyone is highly convinced that the next move is higher, and it will be reflected in the sentiment. And when you see circumstances like this, which we're not going to get into all the details about the loss of the momentum pattern here, but it typically will catch a lot of market participants in a surprise. So basically, condition number 1 is when the sentiment is so freaking bullish. Yeah, we're going to get the trade deal. Everything's going to be nice. Everything's going to be awesome. When everybody's so convinced that the only way the market can move from here is it can move higher. Exactly. At the same time, you will hear a lot of people saying, Leonardo, the market will never, ever drop again, so you might as well drop all your bearish videos. This is how we have actually identified and nailed the top. The magic number that we have established in our 13 market moves daily analysis about 10 days ago was 31.31. We did hit that number. That is the top. That's why the simple answer, when was the perfect time to short the market, was on November 19th, because that is when the market actually set an all-time high in the history of the United States. Now, I know some of you bulls that are watching this, you're still in disbelief. You think, oh no, we're moving higher. Leonardo, we're moving to 3,500, 4,000 in S&P. Maybe in the next 20 years, but no, not anytime soon. Definitely not this month, definitely not next month. Guys, this is the top. we actually compiled about 13 various divergences that point between the disconnect of the reality and where institutional investors are placing their bets. So it is a part of the video that we're going to mention a few things about. But the bottom line, yes, we are saying that November 19th was the best day to short. But hold on, Leonardo, you may be thinking the market was hitting all-time highs yesterday again. And that's exactly my point. What you don't want to do as a short seller, guys, you don't want to short the market when it's clear to everyone that the market is freaking dropping. What you want to do is what we call short the top. What you want to do is simply short the top. But at this very moment right here, when the market was hitting 31.31 pre-market just a few days ago, you were thinking, Leonardo, I can't be shorting this. I'm scared to death to short this, but that's actually exactly what you have to do. Now, we've shortened the market. I want to bring to your attention a couple of very important charts. Chart number 1. This is a representation of what's actually happened in the last 50 days. Pay attention to this number. 50 days equals to 9.8%. What is the 9.8%? Well, it's an increase in the S&P 500 index from 28.50 all the way to 31.31, which set pre-market. We're trading at about 31, just above 31 today, closer to 31.11 area. And so what you've got going on here is an increase within 50 days of about 9.8% higher. And we've taken a closer look and we have identified another period in the recent history of the markets where this condition was matched precisely. But this condition right here of 9.8% is actually slightly exceeding it, telling us that we are exactly overdue down to any day at this very moment for a market to drop. So here's the situation. The closest comparison you will be able to find in the most recent stock market history, which would be the most relevant instance in the history, is going back to December 2017, January 2018. The market went from 26.25 on S&P 500 all the way to 28.75. 250 points represent a 9.5% increase roughly within 50 days. And that is exactly the type of circumstances that we have currently in the market. Now, important to understand is what actually followed next. And what is not so important is to understand the catalyst, which at the time the catalyst was Trump announced the tax cuts, so the market had a ton of ammunition going forward. And some of the wonderful circumstances that lead a trader to some incredible returns is understanding that option premiums, when all the market participants are highly convinced that the market's got no other way to go but higher, they're convinced, and for that reason, the option premiums drop like a rock. So in an event like this, when all the market participants are psychologically mesmerized, they see no other way but for the market to head higher, just like it was with Bitcoin, just like it was with the S&P 500 and the Dow Jones and all that stuff in January 2018. Look what happens after that. Sharp drop. I mean, this was the point where we've nailed that reversal, guys. And I'm telling you right now, this situation that we're in right now highly resembles the situation that we've had in January of 2018. So this is not the time to get bullish despite of what you keep hearing everywhere in the news. So the question, when is the best time to short the market? Well, it's before the big drop actually begins, despite whether you trade in actual stocks or short the market through options. And it is even more relevant that you get in on this move before it actually takes place if you trade in options, for the very simple fact of what is the cost of your trade actually going to be. And more on that shortly. Now, with this, it brings two main issues every trader is facing. One is you don't want to be too early, and number two you definitely don't want to be late and miss the entire moves, because these moves in the markets, they happen rather rapidly, rather sharply, and from the standpoint of short-term trading, you want to be a short seller because the moves to the downside, they happen in much greater magnitude in a much smaller amount of time. So if maybe you're new to this and you're watching this for the first time, trying to figure out how to short stocks, how to, short stocks for using put option strategies, simple put option strategies, guys, click the links below, get more information on our website, tradingoptionslive.com. Watch some of the videos where you're going to be able to pick up a lot of the information on how we do it to produce some insane returns trading options. Now, here's the deal, guys. Majority of the market participants believe that actually no one can time the market, which is a bunch of bullshit, okay? Because we proved multiple times on this channel that this is a simple Wall Street myth. So if you haven't watched videos on our channel like 3K to 42K, 4K to 144K, 2K to 51K, all of these trades are based on our 13 markets move formula. And they're here because we understand when is exactly the point to short a particular stock or index. Now, clearly, if you understand our philosophy and theory and you utilize it and you study it, you can ultimately evolve to a point where you will be able to catch trades like that on your own. So it is possible to time the market. However, you should also know that it is not possible to time the market each and every time. So if you are trying to get better as a trader, guys, 13 markets move formula, okay, click the links below, get more information, because if you follow the history of this channel for the last 2 years, we have been able to accurately predict every single bullish to bearish reversal in the market and bearish to bullish reversal at precise moments. Now, in this last instance, we have been bearish for the last couple of months, and we have been able to catch some incredible individual stock trades. But overall, the market has not been cooperating. But finally, I'm going to show you why we're at this very critical moment in just a second. So clearly, understand this, we don't get every trade 100% right. The only guy that did that was Bernie Madoff. So, guys, there's nothing easy in life, okay? If it's worthwhile doing, it is going to be difficult, so you got to put some of your hard work and sweat into it. But let me just briefly explain that there are clear disadvantages to being early. But that is actually how big money is made. So a lot of you probably have seen the Big Short movie. And I talked to a lot of traders and I asked them, hey, have you seen the movie? And they're like, well, yeah, of course I've seen the movie. I'm like, what's the most important point in the movie that you have learned for yourself? And most of them cannot answer the question. I mean, certainly it's entertaining to watch it, but I think the movie actually highlights a very critical and important point, which is the fact that Dr. Burry, who ultimately makes a few $1 billion shorting the real estate-backed securities, for an entire year, he is too early. And he is losing millions of dollars. So he was carrying these big losses for an entire year, paying extra premiums based on how his contracts were set up before he actually makes billions. It is important to understand that the big money is made, okay, by being early and by planning your trade, understanding that you could be early. So what you don't want to do is you definitely don't want to be late, and I'll give you the reasons why. So the tough psychological battle that Dr. Berry's going through, okay, until the delay effect actually wears off in the market, and finally those securities are priced for what they're really supposed to be worth. So in order to do that, guys, you have to have a solid plan. You have to have a solid plan which comprises of multiple strategies. Just to give you an idea of a couple of them is you have to understand and get it down to a perfect science of how you steer step out of the position, how you stair step into the position. How do you manage your account in relation to the size of your account? All of these things, guys, we teach you in our courses. 13 market moves, charts divergences, how to trade like a rock star. If you're not familiar, guys, with that, you've got to take action now, because we're fixing to close out this 2019, and 2020 is going to be absolutely freaking amazing. So now, there are also clear disadvantages for being late. Okay, now, it's a good idea to be late to a party sometimes, but high cost of options due to elevated premiums is definitely a downside of being late. So once the market move lower becomes apparent to absolutely everybody, the options are going to be priced accordingly. Okay, it's just like trading stock options before earnings. Everybody knows the date. So everybody knows the stock typically makes a move of 6 to 7%. So anything outside of that area is maybe going to be cheaper, but everything inside of that area is going to be highly, highly inflated in price, and is going to be carrying a lot of premium. So understanding that once the move and the timing of the move becomes apparent to everyone, that you're going to pay a ton. Okay, just like the house that you could have bought in 2008 for pennies on the dollar. Okay, you were doubting about it. Okay, it was an awesome deal, but you didn't pull the trigger. Why? Because most of the market participants were convinced that it was not a good time to do it. Now, the same analogy would apply when you're trading stocks, guys. So now, the inability to short most stocks is another limitation when it comes to actually trading the markets when the markets are getting out of control and they're spiraling lower. So simply, if you're trading stocks, you're not going to be able to borrow these stocks. So if you're not able to borrow these stocks, you basically are unable to take advantage of the move lower, which is why understanding how to trade options is highly, highly lucrative. Now, in rare instances, and we've seen it many times throughout the history of global markets, some countries will actually prohibit short bets against the markets. We're not going to get into the details that is actually harmful to the markets. It creates the entirely different outcome for the markets. But not the case, understand that this could actually take place if you are too late. So number one, you're going to pay up through the roof. You're going to pay 2019 prices for the real estate instead of 2008 prices. You're going to possibly completely miss the move if you're trading stocks because you're not going to be able to borrow stocks that you want to short. And three, depending on where you are and what market you're trading, it may be entirely prohibited, as it happened in many instances in the market's history. And it's time to cast your vote on condition number 2, guys. Hey, her name is Cindy. And Cindy is going to represent when put option premiums are highly underpriced. You may be thinking, Leonardo, when I look at Cindy, I'm thinking about buying the dip. Well, think twice, okay, before you buy the dip, because this video is devoted for short selling. So this is some circumstances where you definitely don't want to buy the dip. You actually want to short the top. All right, with that said, I've had a few comments from some of you saying, Leonardo, but okay, the market is all-time highs and put options are cheap for a reason. It's because nobody thinks that the market will drop. That is the exact point of this video, is everyone is convinced that the market is not going to drop because of the quantitative easing, because of the lower interest rates, because of blah, blah, blah. I mean, the list goes on. But the point is, that's how everybody was convinced in January 2018 that the market was not going to drop, and it freaking crashed, and the opportunity was absolutely phenomenal. So the only thing I want to say to somebody that just wants to follow where the rest of the market is going blindly is, don't be a herd. Don't be sheep. Be a freaking lion. Okay. Everybody was wrong thinking that the market would just keep going to the moon in January 2018. And the put option premiums were cheap. That is how you're able to realize 1,500, 2,000% returns in the stock market. Now, clearly understand, once the market drops and everybody understands, oh shit, Leonardo was right again, well, you're not going to be paying what I am paying for these options. That is why you want to follow this simple basic rule, which it sounds simple when you read it, but it actually, you have to really follow through and understand it and being able to execute on it, which is buy low and sell high. So most of the people actually do exactly the opposite. Okay, when they see Bitcoin price going higher, what do they want to do? They want to buy it at the highest price in what? In the hopes of selling it even higher. Oh shit, it's at 5,000. Oh, it's at 10,000. It's at 50, it's at 20. Leonardo, buy it. It's going to 1 million. So this strategy is buying high in hopes of selling higher only works for a certain amount of time until the market actually prices the reality. And these are the type of circumstances we actually have in the market right now. The market is at all-time highs. Everybody thinks it's going even higher. Okay? But people that are buying the market right now, they're buying it just like the people that were buying Bitcoin in December of 2017. They're buying it high in the hopes of selling it even higher. That shit don't work.
This was you at 9:30 this morning, feeling lucky when the market just opened up. Feeling lucky without any calculations. Now, this was you at 4:01 p.m. when the markets closed. Suddenly realizing that some calculations would have definitely helped you out today. And this is you now, trying to figure out how to get it all back.
Great news! You're only 13 moves away from figuring it all out.
Calculate your next trading move before it happens so you can celebrate each trading day. Get the 13 market moves formula today and begin to trade fearlessly.
If you use the 13 markets move formula, you're going to be able to buy put option premiums substantially lower than an average market participant. So basically, put options premiums, they skyrocket when everybody realizes that the market is dropping. So same options, let's say I was buying for $2, now you're buying them for 12. Why? Because you didn't want to pull the trigger when the market was going high. Because you were thinking Leonardo is wrong. Okay, because basically, now that I'm up 600% and you're sitting there thinking, should I do it? Should I not? And when you finally fucking decide to do it, you're going to look like this guy right here. Oh shit. Leonardo Is Line. He ain't making, man, how could he be making 1,500 to 2,000%? I took the trade and man, I'm losing money because you're buying the damn thing at the lowest point of the day because you're buying the damn thing when it's apparent to you that it's dropping. It's an easy psychological trick. You gotta short the top and you gotta understand what is the top. Oh, speaking of which, mid condition number 3, cast your vote right now if this is your favorite condition. Mid, her name is Natasha. That's right, guys. Type in the comments if you like, love, or hate condition number 3. It is when the market ignores all signs of deteriorating economy and hopes things will get better next year. Because that's exactly what's going on right now. And surprisingly, that was exactly what was freaking going on in 1929. Okay, we went from the roaring 20s, okay, which could be compared to the last 10 years or 11 years of free money, stimulus, cheap money, all of a sudden to the greatest crash ever in the history of the United States markets. So how the hell do you go from roaring 20s to 1929? Well, the most crucial thing about the 1929 was the fact that everybody was highly convinced that the market was going nowhere but higher. And the second thing that is highly coincidental is everybody was borrowing money to buy the stocks on leverage, to buy the stocks on margin. Okay? If you were in any kind of business, you would go and use the money, put 10, 20% collateral to buy 100% of value of the stock. So when the market kept crashing, nobody could meet their liabilities and they lost everything. Okay? So same conditions are met in the market right now, guys. Nothing has changed. We don't learn from history, right? Everybody is levered up. I mean, look at your credit card bills, okay? They're not going lower. You're buying more stuff. Banks keep opening you more credit cards and they keep increasing your credit limits. Why? The money is cheap. The economy is good. It's only going to get better from here, right? Fucking wrong, okay? I'm not saying it's about 1929 is about to take place. We could be a little away from that. And of course, yeah, there's certain measures that are going to be taken this time that they did not take place in 1929. But you could not ignore the similarity of the market conditions. Okay, you got the highest level of student loans. You got the highest level of credit card loans. You got the highest level of corporate debt. You got the highest levels of everything from the standpoint of borrowing. Now, it makes sense because the money has never been so cheap. But just because the money is cheap, it does not mean that the companies are not going to lose money. Just because the money is so cheap doesn't mean that 1929 similarities are not present in the market. So corporate debt versus GDP, all-time highs ever. Poor manufacturing numbers continue to hit. Retail numbers, despite of the QE. I mean, remember, back in 1920, they didn't have any freaking QE, okay? The rates were not as low as they are right now. And despite of the QE and all the low rates, guys, companies are having a hard time. They're all slashing their forecasts for the next quarter, for the next year. And don't get me started on oil prices, which everybody thinks are going higher because the Aramco IPO, we just hit a 58 level in the oil prices, which is a huge resistance. From here, we're moving lower. When oil prices are going to be at 20 bucks in the next 6 to 12 months, guess where the market is going to be? I guarantee you it ain't going to be at all-time highs. Now, this is how stupid things actually get. Nobody's listening to what the companies are saying. NVIDIA announces a report and it says lower sales for the next quarter. And what do? The stock typically would drop like a rock. Oh, nobody cares it's going to have lower sales soon in the next quarter, in the next year. Everybody is blinded. Okay, and that blindness is similar to what people would describe back in 1928, 1929. Nobody cared. What, you're not going to sell as much shit next year as you are right now? Oh, well, that's a great reason to buy your fucking stock. Let's do it. Come on. Home Depot, right? Lower sales numbers, the stock should be way lower. They're saying, look, we're not doing as good despite of the QE, despite of the lowest interest rates. Home Depot slashing forecasts when the interest rates are the lowest and when the unemployment rate is the lowest. What is going to happen when interest rates are going to go high? Which, of course, they're going to try to prevent the interest rates from going high, but it is destined to happen because the dollar is about to flop in the next 12 to 24 months. So if dollar flops, okay, the interest rates are going to have to go high. With that said, meet condition number 4. Her name is Mia. Guys, cast your vote for Mia. Okay, if that's going to be your favorite condition for sure in the market. When institutions are buying stocks, not based on merit, but simply because everybody else is buying United States market stocks. And therefore, it's just simply the best option to put your money in right now. So basically, institutions are buying for the wrong reasons. Oh yeah, we know the market is overpriced. That's what they're saying. We know the valuations are out of control. Oh, we know it. But what else are we going to buy in this market environment? The rates are low. The bonds ain't paying nothing. What are we going to buy? We have to buy stocks. Guys, it's just like saying, look, Pretend for a second you're at the bar, okay, and you're a single guy, and there's a girl right there at the bar, and you know she is not a 10. She's not even a 7. She's like 5 minus. Basically, she's ugly as hell, but her body's nice. And you're like, man, that's a nice body. Bartender, another shot, please. Hey, baby, what's your name? Guys, we described this rare market condition recently in many videos, and we named it miss and squeeze type behavior in institutional buying. Basically, this is what it means. UNP announces earnings, they're bad, they missed on earnings, they missed on future projections, the market temporarily, briefly sells the stock, and then they buy it and they keep moving it higher on bad earnings report. That's what you call miss, and then squeeze the short sellers out of the market. Domino's Pizza, horrible freaking report. Miss and squeeze. Drops quick, and then they buy the hell out of it and move the stock for no reason to the moon. Goldman Sachs, miss and squeeze the hell out of short sellers. ODFL, miss and squeeze out of the short sellers. Guys, missing numbers on the earnings report is not good. But what's even worse is giving poor forward-looking guidance into the future. That does not equate to a reason to buy stocks in any market conditions. That equates to a reason to sell stocks. But we're seeing this great divergence where they're doing exactly the opposite. Now think about this. Why could this be happening? Okay, lower interest rates, QE, that's understandable. Okay, but it's actually pure psychology. It is easy to think that things will just continue to get better. And the reason why it's easy to think that is because market is up 30% in the last 12 months. Human mind is programmed to feel good when things are good. Now, when things get bad, okay, it's also easy to think bad, and exactly to the point of December 24th, 2018. Yes, I do have a video posted somewhere on this channel showing you how to take, 50K to 110K. That was actually the day when the market was only open for 3 hours. And it was dropping like a rock the day before Christmas. Unheard of for the stock market. Typically, nobody is there. There's no volume. Nothing is happening. And yet, the market was setting a low for the year on December 2018, on December 24th. Now, we have also identified that reversal to the bullseye we said for the next 6 months from there, the market was going to move high, which was highly controversial. But how did we do that? Guys, the answer is simple. It's the 13 market moves, but understand the psychology. Okay, it's just like South and North Pole, okay? We are miles and miles away from where the market should be priced right now. The reality has not hit the markets yet. It is the delay effect like you've seen in the Big Short movie, and it is about to hit the market. Hey, condition number 5. Her name is Karen, guys. Cast your vote in the comments section if condition 5 is going to be your favorite reason to short the market. When you combine all the divergences that we teach in our charts in divergences course, guys, there's many divergences. I'll give you an example. And this is where a lot of traders, okay, they get the market wrong. Meaning that when the markets get so complacent and they keep utilizing the same strategy over and over again, you're so highly programmed in your mind to keep using the same strategy again and again, you keep ignoring the obvious signs. And I've got an example here for you. We actually posted this example somewhere on YouTube. on November 18th, right? So here it is. Here's your simple case of divergence. The market is hitting pretty much all-time high right here. But guess what VIX is doing? The fear index. If the market's moving to all-time highs, the fear index should be moving lower. If the market is moving higher, the VIX should be moving lower because they had an inverse relation. But that's not what's happening, right? So the market moves higher and the VIX moves higher. This is your first giveaway. Hold on. There is going to be a trend reversal coming up. And then we have other divergences that we can point on the charts, which I'm not going to get into a lot of details, but simple divergences that are divergent between the RSI and the price action, accumulation, distribution, and the price action. Okay, simple things like Apple has been leading the market and the market is hitting all-time highs while Apple is hitting lows for the day. So when the leading stock that's been pushing the market to all-time highs, all of a sudden is in a disagreement with the market, that points to a trend reversal opportunity. But people are so blind right now, they simply refuse to look at it. So divergences are keys, and if you're trying to understand how to make a substantial amount of money in the market, guys, that's what you need to focus. It's about the divergences. Damn it. I've been saying it for 2 years. And if you listen to that, you've been able to put some crazy trades like I've shown you guys on this channel. You know, 3K to 39K, 3K to 59K, 114K, whatever. All the videos are here. If you want to see me trade live, you can check them out. But the bottom line is this, guys. There's so many divergences that are developing in the market right now that it makes no sense not to pay attention to this. So there's about 13 different divergences we have calculated. It coincides with the 13 market moves. I think that is enough divergences to go ahead and short the hell out of this market. And here we are, guys. Condition number 6, Kayla and Nicole. Kayla and Nicole, any voters on Kayla and Nicole? Basically, when these divergences, guys, coincide with a rare 13 market moves sequence, it is time to pull the trigger. So for those of you who have been studying the 13 market moves, this should make sense. For those of you that haven't, then you need to go ahead and click the link below and study the hell out of it so you can become the best trader you can be. 5-day sequence was pointed out before the market opened on the 19th of November when the markets actually were hitting all-time highs. 11-4-4-7-4. Now, you probably heard about the market move 666 sequence when the markets actually crashed last November, and we have accurately predicted that drop down to a day. You probably have heard me post multiple videos this summer in July when the markets were about to excel and go 13 days straight forward, back to back, high and high, and hitting all-time highs in July. Guys, that was a sequence 777. Now, this is a very rare sequence which point to the fact that the market is entirely out of juice to move higher here. So despite of the fact, when you look at the stock charts in 1 day, 1 minute, it looks like they're buying every dip. Okay, but anytime we've looked in the history of 13 market moves, when you have a sequence 4474, followed by a derogatory move like a 2 or 3, basically a bear move, okay, those bullish sequences that appear to be bullish, they're not validated, and the market breaks lower. See, even though you may be looking at the slide, you're like, dude, I don't see anything but green besides like that 111 there. Guys, this is a bearish sequence. So we combine this bearish sequence with a ton of divergences in the market that leads to a market drop, not a breakout high.
Do you know who makes the best traders? The answer is the hunters. You cannot sustain your trading account on hunting for fruits and vegetables. And what I mean by that, those trades where you go in and you're happy you made $100 or $200, and what happens the next day? You give all these mediocre gains back to the market again. If you're tired of doing that, guys, there is a lion in you that is ready to chase real trades with some real meat on the bone. If you're ready to advance your trading skills to the next level, click the link below so you can begin to trade fearlessly and put some serious meat in your trading account.
And hey, here's a proprietary little secret. I'll tell you how we know the market is about to drop. It often coincides exactly with the moment when we start getting a lot of negative comments from our subscribers. So me, last condition to short the market, his name is Ricky Martin. Ricky Martin, watching the channel, putting a bunch of bullshit comments out there. Leonardo, just trade the trend, man. Trade the trend. Can't you see the market's moving high? Leonardo, just give it up. Leonardo, you don't know what you're doing, man. Guys, thank you for confirming. Thank you for confirming that I'm right and the market is about to freaking drop. I appreciate all the negative comments. And for those of you that would like to vote for Ricky Martin, put in negative comments on this channel. Go ahead. This is your chance to type in the comments, I love Ricky Martin. Gotta have some fun with this shit, guys. So, the bottom line, you're probably wondering, okay, Leonardo, you talk a lot of shit in this video. How do we actually trade this? Okay, fine, I'll show you. So, we've been talking about the semiconductor stocks. And Qualcomm, despite of all the crazy bullish activities, recently, instead of moving higher, it created this black candle, which for those of you who don't know what the hell that is, it's actually a representation of institutional selling while the price actually is moving higher. And often is followed by the reversal and move lower, and that's exactly what we got. So if they're not buying the stock that everybody in their grandma's been bullish on the news, okay, that is a good representation of a top in a semiconductor stock. So we're highly bearish on semiconductor stocks. LRCX at the point I'm recording this trades at 276.76, and it's showing clear signs of a top. Damn it, you got the MACD cross, you got accumulation distribution to the max about to drop, you got multiple divergence. Guys, this is a recipe for a move lower, not a move high. AVGO, huge reversal candle. Somebody puts a freaking buy rating, right? They've been waiting all this time, and then finally it's fresh a buy rating, and the market participants say, ah, man, where have you been, Mr. Analyst? Like, hello, thank you. We're going to sell it at 325, so the stock at 317. It's time to short the hell out of AVGO. It's going to be under $300 soon. And of course, our favorite darlings, Amazon and Google. Buy puts on these things, guys, on the bounces. What we got is a very interesting pattern on Amazon, which is a representation for one of the leading stocks leading the markets lower. Now that we're getting Apple divergency on board, all of a sudden the tech sector is about to reverse and move substantially lower. Amazon actually got a very rare chart situation right here. We got a huge head and shoulder formation right here. Death cross. And now it is followed by a miniature head and shoulder formation on the smaller time frames. You got double head and shoulder with a death cross. This is a recipe for Amazon first dropping back to $1,650 and then going all the way down to $1,500. Guys, this is not a joke. Some of the worst sectors in the market right now, the cloud stocks and the retail stocks. We recently posted the video talking about how to short the hell out of all the retail stocks. Amazon is a representation of a cloud and retail sector combined. So double bear on Amazon. And Google is just having an obnoxious time breaking out to all-time highs. Can't hold the levels. Guys, the bottom line is to short cloud stocks, semiconductor stocks, retail stocks. If you don't know what they are, we got a win-in watch list of 300 stocks to break them down by sector. All you got to do is follow it, understand the correlations, short the hell out of them, done. If you want more details on the daily trades that we're taking, visit 13 Market Moves Daily Analysis. Subscribe to the video so you'd have it before market every day. Now, to learn more about trading options, chart divergence, 13 Markets Move Formula, visit tradingoptionslive.com. Guys, with that said, trade like a rock star. I'll catch you on the next video. And oh, by the way, last thing, if you are a model and you'd like to audition for the 13 Market Moves Spring Edition Bikini Calendar, Submit your request via support email at tradingoptionslive.com. Make it happen, guys. I'll catch you on the next trade soon.